Okay, let me start off with just telling you about the recent changes that we have done. The main thing is in futures charts, beta, the trading view based charts for futures that we have added. We have added 75 minutes time frame, which was being requested a lot. So this time frame is there. Continuous charts are still to be added. We are working on those, and options charts also trading view based. We are working on those. So I mean, we need to customize a lot as very specific indicators are to be added, like PCR, IV, and all that. So that is taking some time. So, but we'll probably release that under beta, option charts under beta in about, say, 7-8 days, probably 8 to 10 days max. So we should have that. So work is already going on. So that is one change. The other change was related to this. Day-wise, we have added, if you check any particular stock option, we have added rollover, and we have added market-wide participant limit percent. So these two columns have been added. The rollover scan itself is coming. So I mean, this shows you rollover for a particular script, but for the all scripts as a whole, the rollover itself, we are coming out with another new scan that is going to be added under futures very soon. But this is available at the moment. And the other thing that we added recently, what was that? I think total PCOI. Yeah, this column we had removed. This column got added back. So as many had requested it, so we have added this back. Now this page has lots, which was enabled recently. So you can look at the OI change in lots. Same goes for options OI breakup. Here also we now have lots. So you can check this in lots. We also have separate call and put strike. So this was required because people were looking at in the money versus out of the money and that kind of stuff, or in the money for both call and put. So for some kind of analysis that was being done, so it was requested. Added combined OI and combined price also. Combined in the sense, basically straddle price if both strikes are same. Basically combined price of these two and combined OI of these two strikes is what we have here. So these were the recent changes. Okay, let us go back here. If there are any new members here, I would like to just
yes.
Yeah.
Actually,
yeah,
I've taken the eye charts in the last week only.
Okay.
I was going through.
Okay, sure. So I'll point out one thing here. Option chain is the key here, and the trend column here. This ideally just monitor it all the time. So just have this on, enable this trend, because this quickly tells you the kind of trend that is going on in the market right now, the short-term trend, intraday trend. If both sides of these, I mean, the call side and the put side of the trend are bearish, then the market trend is bearish. If it is bullish on both sides, then it is bullish. And if one side is bearish, the other side is bullish, then the trend is sideways, or there is no significant trend there. So this quickly gives you a snapshot, and this changes quite quickly. It depends on the OI buildup that is going on, the OI change specifically, and the price change. So this, yeah.
Excuse me, I have a small doubt. See, here in the C set, the trend is bearish. That means the market is going upside, right? Actually, in the point of seller's point of view, right?
Basically, this just means that lots of calls are being shorted. So basically, that is why it is bearish. So basically, if the call price is going down, that is negative, and the OI change is positive. So it is short buildup. So call side short buildup will be bearish. So it is basically bearish on the call side. And at the same time, put side, if you see the price change is basically negative, but why? Just a minute. Let me enable this so it will be much more clearer. And let me just turn this off for a while. Now here what is happening is there is price change. Yeah, price change is positive, and OI change also is positive. Here, wherever you are seeing bearish here, that is short buildup. Short buildup is happening over here. Sorry, long buildup. Sorry, long buildup is happening because price is increasing and OI also is increasing. So again, this is
because this is predominantly market sentiment. We can say market is bearish on the both the side, means market is looking to go down.
Exactly.
It has nothing to do with call or put. That was my friend was asking. This is more to tell about the market sentiment. And Shrikant, same thing applies for the OI snapshot also, no? There also, if both the sides is green, means market will go up.
Exactly.
Both the sides are red, means market will go down.
Exactly. Yes.
This is market sentiment, not specific to calls and put.
Exactly. We are trying to get the overall sentiment that is there, or basically what is happening overall in the nearbys. And this is a lot more important for the near ATM strikes. I mean, if you are looking at analyzing something over here or here, then it may not make much sense. But basically what is happening at ATM and 1 or 2 strikes above and below ATM is what is very important. So here, if you see it's short covering this side, so this may not matter that much, but here basically these 3 strikes, it would matter a lot. So ideally, just keep an eye on this during the day. This will be useful. The next would be, let me jump to, there are 3 key tools here. So we'll go through this first. Again, for the basic analysis of trend, cumulative OI change, multi-strike OI change, multi-strike OI, and total PEC OI. Basically, cumulative OI change is now similar. This whole functionality is available in this also. So this is interchangeable. So you can either use this or this. This is a very old tool, and this is a lot more newer. So we'll go through all this. I mean, let us go here to get a brief idea. Basically, if I have selected all strikes here, let me move this. Just select all strikes here and whatever script you have selected. If the call line is above the put line, the general sentiment here is bearish. Overall OI buildup is suggesting that there are a lot more calls being shorted when compared to puts being short, or basically more call writing than put writing, basically. That is what this says. Again, this is only a sentiment. You still need to confirm it with price. Now, if you see overall from morning itself, it is negative, like lots of calls are being written than puts. So, but the price, if you see, is going up and down, or basically it gapped down and then it just went sideways. So overall sentiment is bearish, but then you would still have to, for your trading, you still have to rely on price, and you have to rely on price-based indicators to get your buy-sell signals. So this just gives you overall sentiment. Now here, another key tool over here is this blue line over here, which is the PCR. This is generally which side this is trending, gives you the immediate direction in which the price could move, because this again, PCR relies on, again, OI. So this is something additional that you can take a look at. On such a day where it gapped down and then it went sideways, it may not be that much useful, but many times what it does is it gives you a counter signal. So, and then alerts you to a probable change of trend that is coming. The price may be going down, but then the PCR would maybe just flatten out. These flat areas in PCR, on the PCR line, are important, because on many days you would see this, that whenever there is a consolidation and a probable trend change coming, you would see a flat PCR going flat. PCR going flat means that put writing and call writing is matching at these levels. So it just indicates that no side is has significant advantage, or both sides are almost similarly balanced. So basically you need to wait and see which direction the PCR line goes, or price probably obviously will move first. So then you would get a clue as to which direction it is going. So on a sideways, sideways days, it may not be that useful like the way it is over here. It's like price, it is going up and down, but on many days, most of the days, it will be a lot more useful. You can check this. You can also go for near ATM strikes. Fixed means once you select this, it won't change. Basically, when you load this and select this fixed, then these 3 strikes that get selected are fixed. They won't change throughout the day. They'll just, based on this, you will get the picture of what is happening around these strikes. Now, if you want to make it dynamic, but of course, do note that this is going to be confusing. Many people get confused. Now, if you use this near ATM strikes, but instead of fixed, it is auto adjust ATM strikes. So this ATM strike that is there, it keeps auto adjusting. See, when you had selected fixed, these strikes were there. Now what will happen if this is selected? Now this can dynamically change. Once price moves, these 3 strikes will change, and then this picture that you will get is for these new strikes. Whenever the price changes, for these new strikes, what is the picture? It tells you that. But then people get confused because the whole scenario can quickly change immediately. So sometimes when price goes up, and from here, if you started monitoring when the price was here, and now suppose the price is over here, from bullish, the whole scenario can change to bearish over here. It just indicates that at this particular price now, you're getting a different scenario. It just tells you that. And if price is jumping around this and the ATM strike is changing quickly, then the whole scenario can change quickly, and then you can get a very confusing picture. So you have to be aware of what this does, and then based on that, you should decide whether you want to use this or not. This has its uses, but you know exactly why. You have to know why you're using this. So do understand that the whole picture can change if you're using this. Now that's it for this. Selected, if you want to only keep selected strikes, you can go for selected strikes and then select which calls and which put strikes you want to monitor. You can also do that. But generally, all strikes is what gives you the overall picture, and most of the time this is fine. If you want to be more precise, then go for near-term strikes with just 1 strike above and below the ATM strike, and then you would have a finer control over the kind of picture that you see here. Now, let us jump to the similar tool. I said this is similar to this, but few other points are there in this. So let us go here. Now here, now this gives you, now time-wise, whatever time frame you have selected here, it will give you a futures price, VWAP, PCR, IV, then futures OI change, and then for this script, the total OI based on what you have selected here. I have selected all strikes, so this total COI, total PEOI is for all strikes of this script. Total, what is the call OI, total put OI, then the difference of this and this, that is put minus call OI. That is the difference here. Then the OI changes, same call OI and put OI change minus call OI change is this difference. Now this particular column is the difference between this and this. It just tells you how this itself is changing. That is this. And this particular column is just a running total of this. It's a running total. It just tells you over time how this OI change trend itself is changing. I mean, this tells you as it goes more and more negative, it just tells you that the trend is, I mean, the negative trend is strengthening. So this cumulative change, OI change trend will tell you that. It's just a running total of this, continuous running total for the whole day. Now the main thing that you need to monitor, you can this OI, difference of OI, you can For positional traders, this may be important because this gives you a very far off picture. But for intraday, this OI change difference is very important. This tells you basically cumulative OI change. We were looking at those two lines. Basically, these are those two lines. Let me first go to minimum 3 minutes. So, and that cumulative OI change that we saw here, it was price was minute by minute and OI was every 3 minutes. So you get a very similar picture over here also. Just the lines are different here. This is a smooth line and that was a stepped line, but the picture is going to be exactly the same. Now here, this particular column is the most important, and you just need to focus on this because this will tell you what is the trend of the market right now, or what is the sentiment. Basically, you still need to confirm it with price, but this gives you overall picture of what is happening in terms of OI. So you can here, the other points are the red shading here tells you that this price, futures price, is above its VWAP. This is VWAP here. It tells you above green will tell you it is above VWAP. Red will tell you it is below VWAP. So this is again a good thing to monitor because you clearly know that how it is, how the price is moving with respect to VWAP. And this is one kind of additional confirmation. Because once it is, you see red here, but overall green over here, then it just means that this is still not strong enough. I mean, the trend here itself is not too strong. Once it settles down below the VWAP, and then this also increases, then you know that now the trend is settling down and it's going to continue. It could continue down further. So this quickly tells you that. And here, this OI change column that is there, this tells you a little bit beforehand. You need to monitor it on a 3-minute level. And basically, before now this turns green over here, you will see that it has started slowly turning green. But this, of course, this needs these values to get any idea whether the trend is changing. These values need to be more powerful, I mean, rather more larger than what has happened over here. But in this case, it is not that much. So you just need to keep an eye on this. If you see 6,000, 4,000, 5,000, 4,000 lots were negative over here, or 14,000 over here, but here it is still not that strong. Only over here it changes. This kind over here, this is almost in sync. I mean, when this went into green, I mean, this also got a little bit more sizable. So, but this many times you would see that this would give a slightly quicker indication. I mean, it would, of course, you would not get faster buy sell signals, but what this does is if you are in a short trade over here from the morning, then you would get some kind of a alert over here, and then you could probably tighten your stop loss or take some profit and all that. So it'll be a lot more clear on many days. These days it was not that clear. I mean, these figures were not positive figures against the trend, were not powerful enough to alert you. But many times this will happen. You'll get big numbers here before it turns green over here, and then you could tighten stops or take partial profits or whatever based on your system. So, and this tells you overall, as I said, this is a running total of this. So this tells you that this is still very much in red, even though the price has gone above VWAP. I mean, the overall trend is just still mostly negative. So this is what tells you. So you can keep an eye on that. This could tell you for the whole day what is happening. So the overall trend here, it's just clearly negative. That is what this just says. There is a chart also. You can collapse this. There is a chart also over here. You can change the time frames based on which you want to monitor. The rest, these are the same. Again, be careful with near ATM when you select this auto adjust, because the data itself, many people have got confused because the data quickly changes. If you see based on what you select, This whole picture keeps changing. And when you have this auto adjust ATM strike enabled, then these strikes change, and this can, from red, this can go suddenly in one update, it can go to green. So it's not that people just come back to us and say that your data is wrong and all that. It's not wrong. It's basically, it's just changing the whole strikes. So the whole scenario is changing. So you have to be careful and make sure you know what you're doing over here. And then if you want to be safe initially, just go with all strikes. It'll give you the overall picture for the day. So, and things will be clear over here. So this is about PCUI. Multi-strike OI. This, what I do is, this basically gives you whatever strikes you have selected based on trending or near ATM or selected. And here you can select either OI, if you want to monitor either OI or OI change. So here, whatever strikes are selected, individual lines are plotted. Whereas in cumulative OI change, it was the total of the strikes. All call strikes were added up, and all put strikes, OI change, were added up. But over here, you get individual OI or individual OI change lines. So this is useful, especially to get a quick snapshot on what the overall sentiment is. If you say, for example, turn off this multiple line colors, now these all red lines trending. I have selected trending strikes here and OI change here. So immediately I come to know that all lines are red, indicating that the sentiment is overall down. This gives you a quick snapshot. So to do this, I mean, if you uncheck this multiple line colors, it will tell you if the overall indication is sideways. I mean, on this day, there was a big gap down. So on Friday, so it's overall negative. But on the other days, if it is a sideways, then you would get a mix of red and green, say maybe 2 or 3 reds and 2 greens, something like that. So it would quickly tell you that it's sideways mostly. Or if it is bullish, then all these lines will be green. So you'll get an indication that overall it is bullish. So you can take a look at this. So if you want to monitor OI, select OI, or this will be OI change.
Just one thing,
Yeah.
for straddle, I mean, can this be one additional signal? Like if you see like this completely red, means we should not. So unless there is a mix of both the things, we should not look at straddle. Can this be one of the way? Because this means only red is thing, or sometimes only green would be, strong. So that means the market is trending.
Yeah, sure.
Does it has some?
It can be. You just have to take a look at this during market time, and then you can decide. Yes, that can be one of the signals, because
I never looked at it. I was just discussing with it. The thought came, probably.
Yeah, sure. I mean, on many days, similarly, basically, this will be similar. If you see at ATM strike, if you see bearish one side and bullish other side, basically the same. It will be the same. It will be a sideways scenario, and then straddles, of course, short straddles will be much better on those days. Obviously, yes, that is true. That is true.
Sure, I'm also just new to the side chart, so just raising more questions.
Sure. Welcome, most welcome. Yeah. Okay. So, and here you also have PCR and VWAP and IV. So mainly, if you're tracking price versus IV, you can just disable this. If you want to only track that, you can just track how price versus IV is behaving. So you can do that also. So that is one. IV versus price is available live only on this page over here. We don't have it available elsewhere. So this is one more thing that you need to keep an eye on. This is useful to quickly see, like people enter on IV spikes. Whenever there is a big change in IV, they quickly want to enter a short trade. So this could be useful. You see IV has gone down in the morning, and then you suddenly get this spike over here. People like to sell straddles or options over here, because then there is a little bit of advantage. I mean, of course, it did not go down much, but then again, you could add more here, and then overall, and later IV went down at the end of the day. So there is a slight advantage when you sell options during a IV spike. So that could be one of the things that you can take a look.
So this is combined IV, na Shrikantji?
Yeah, this is overall IV for the script. Yes, and this, I know when we say overall, it will just be current at the money call and put IV, the average of those IVs. So at the money is 16.4. So IV that is currently showing over here will be 16.4 call and put IV average of that IV. So it is that. And this will be a running average. I mean, whatever the price currently over here, it will be like 16,500 will be the strike for which IVs will be considered over here, and the average of that will be there over here. So that is what it is. So it is a running ATM average IV basically. So we call it average IV or overall IV of the script. So this is it. So this IV versus price is available only in this page at the moment. So that is about this. So these three are the key tools to get a quick idea on the overall sentiment that is going on in the market. Now, for getting more precise, what to do when you are actually, you want to trade something. So if you have decided, I'll just go for a brief concept. Let me go for 16.4. Here, as a general rule, whenever option price is moving below VWAP and OI is increasing, that means the option price could continue to go down. Option writing is going on. It just means option writing is going on and price going down further. That means lots of sellers are coming in. So since we assume, I mean, the analysis we do is from the point of view of sellers. So this is what it is. As a general analysis, option price going below its VWAP and OI, this red line is OI. OI increasing aggressively means that there's a lot of writing going on, basically. So this you could short here and have a stop loss somewhere here above swing low above this VWAP, somewhere over here, or just above this VWAP also. Similarly, other way, once you short over here as an example. Just a minute. And then once the OI flattens out over here, OI flattening out here just means that whatever trend was there over here, that the shorting was going on here, is flattening out. If you see, the price also has gone sideways over here. And once you see a drop from that significant drop, I mean, this drop may not be sufficient, but once you see something like this horizontal line over here and it drops over here, then the price could keep going up. Of course, this was end of the day, it did not meet much. But when you are looking at this on a trending day, it will be clear that once price goes above VWAP and then the OI starts falling, then at that point, the price can really take off for the options from here. You can go and check a previous day, maybe. Yeah, here if you see, the OI was flat, and then from here, price went down below VWAP, but the OI has not gone up. Over here, it has gone below VWAP, and then the OI started taking off. That means a lot of shorting has started, call writing has started here, and the OI is increasing steadily. And that's it, it is going down. Basically, this was the expiry day, so you should actually be looking at the expiry day itself. Only then it makes sense. But even that, then it is valid. Yeah. Here, similarly, price went above VWAP and OI was increasing, little bit fall. On the expiry day, this will be magnified. I mean, whatever little that you are looking at, it will start really getting amplified. Here, if you see this, it is more clear, price going above VWAP and then OI flattening and then suddenly going down. on expiry day, this will carry a lot more importance. These OI changes will carry a lot more importance, because then at the, I mean, lot of shorting is going on, and then people are very sensitive to price moves because they have to adjust, and things cannot be allowed to go out of hand. So everything that you see here will get amplified. So here it is a lot more clear. Once price goes above VWAP and the OI starts falling, price really takes off. And over here, OI keeps going up, price keeps going down. From here, basically, this is basically profit taking, because this is almost gone. This option the price itself is gone. It's about 2 rupees over here. So this don't want to take more risks. So that's it. People are closing down here. That's the reason why OI is going down. But if you see on conventionally on the other days, sorry, 5th. May 5th. We were seeing this example here, price going down, OI going up, exactly over here. Here, this was enough. Just this was enough for the price to keep going. Again, over here, OI got built, OI unwinding, and price going up. And in this case, the OI building went on with the price, but this one little bit of unwinding was enough for it to push the price. So this is the basic concept. Most of the time, most big explosive moves that you get on the upside, you will see that OI gets built up significantly. OI gets significantly built up, then price goes above VWAP, and sudden unwinding happens. And that is the point where explosive moves happen. So this pattern, you can keep it in mind. If you are a seller, the opposite, price going below VWAP and OI starting to go up. OI starting to go up is basically confirmation that writing is happening, basically. Here, basically, this is what lots of people are writing, and then here they have got trapped, basically. People have lots of writers have got trapped because the price suddenly shot up over here. So unwinding happened over here. Sudden unwinding again pushed the price up. This is the pattern over here. So this is about price versus OI. This is getting a little bit doing precise analysis. Buying requires precise analysis. So you could use this. Options OI breakup is when you want to get into the low level details of what is happening with the OI buildup at particular strike. I mean, if you have selected a single strike over here, and for example, I'm suggesting you go for a 15-minute time interval, so you get a clear idea of what is happening. And at 9:30, when yeah, any question? Please mute if you don't have any questions. Thanks.
So I have a question.
Yeah, if you can, I think your voice is echoing, so I think you need to turn off the volume, lower the volume on your speaker, and then you can speak.
Yeah, so now it's fine.
Yes, it's fine.
Yeah, in the previous thing that you were mentioning, the unwinding and the build up, will we be able to figure out whether it's unwinding, because whether we should be ready to take the trade, or it is just writing or unwinding happening, whether we can still be in the trade? Is it we can figure it out, or when it would be the right
it is I mean, there is no, see, it is all basically an estimate, because you are just the thing is here, and what happens is suddenly when the price moves, price shoots up basically. And here, if you see, a lot of writing has taken place. OI getting built up is a writing happening. And then suddenly the price, because once when this is basically writing, and people are assuming that the price is going to go down. That's the reason why writing is going on. Because writing happened after, significant writing happened after the price went down over here below VWAP. So people are assuming that this now price is going to continue to go down, and then suddenly price has shot up. When this happens, whoever had returned here are in significant loss here, and then they are at big risk because the price can continue to go up. And that is why this OI gets, lots of trades will get closed up over here. And that is the reason why we are saying that this is unwinding. So this is only based purely on experience and observations. You will get to know this, that there is no clear-cut way to know that, of course, that why unwinding is happening over here. This is just an analysis, because the concept that I was telling you, that whenever price falls below VWAP, you will see a lot of writing coming in. That is, you will see all the time. Now this is trap happening.
No, I was saying that can we link it with the call side, the left side, which is call side 16700C, and this one, to figure out, is there a possibility that we can, between these two, we can figure out, okay, this time it is is there a possibility by the left chart and the right chart?
Could be, because since these are same strikes, it could be possible. See, because if
so Shrikant, this will show this will show as a 16700 CND will see as a short build-up, and 16700 P will show as a long build-up in the trend, and that is what exactly will show, is what I was thinking, if it is significant. But if you're saying that unwinding is just an indication, not significant, then it might just show as a short covering than a long covering than a long build-up. That is the only change that I think would be there in the tracker. This particular line is not very big, just from 1 o'clock to 125. If the quantity is not very high, then probably that would come as a short, long unwinding rather than build-up. That's the only thing. Otherwise, it is visible. It will be short build-up and this will be long build-up.
Could be. You need to, compare. Yeah, you could compare these two also and then come to your own conclusions. Absolutely. Very true. I'm just explaining how the OI gets built up over here, and then based on that, what you can try and figure it out. Yeah.
Okay, thanks.
Okay. Options OI breakup, as I was saying.
Shrikant, I have one question. I don't understand this combined OI usage in this particular chart. That's what I was trying to understand. By straddle, we know combined premium and all. How do people use this combined OI and combined price? How does
this is specifically, this has been added on Mr. Bijay.
Correct. Exactly. Yes.
So I'm going to try and get him to, I have requested for a webinar for our members. So we'll see if he agrees and conducts a webinar, then we'll know exactly how he uses it. So, I really don't know how this is being applied, but he says there is a very specific scenario for which he uses it, or basically actual signal for his trades. So
he was asking this, and along with this, he was asking a total value. So suppose if the price is 500 and the volume OI is 1000. So what is the total volume? So he analyzes ITM, what is the total value, and out of the volume. So he said the I charts they are going to use this. That is what he was saying in the Facebook.
We are going to add that in option chain in the bottom summary part, the in the money value and out of the money values. Total values. So that also is pending, and we'll be doing that. So, but it's based on some. He does
that I could understand, but I never understood how to use this combined OI and what to do. Probably we'll get some insight.
We'll see. I'll try and get information from him. If he conducts a webinar, that will be excellent. So I'll try and request him. So we'll see.
Thanks.
Okay. This again, this is for actual strike level analysis when you want to actually take trades. Now this first row here, I'm suggesting go for 15-minute time interval. So, and then at 9:30 you will have the first reading here. This will be over by this particular data will be ready by 9:30, and then once you have a short build up on one side and long build up on the other side, I call this strong signal. Or you could even just based on one-sided, you could decide on that also. But I try and look for a strong signal on both sides. So short buildup on this side, then the other side long buildup, or vice versa. So once this happens, this is the kind of sentiment. If it is there for 15 minutes, we are looking at 15 minutes time frame. If it is there on a 15-minute time frame, then it carries a little more weight. Then you can look for signals for these strikes on the actual charts, and if your price-based indicators are giving signals on that, then you can probably go for that. So let me go to this chart for 1 second. I'll turn this off. I'll turn this. And let us go forward. You can have your own any indicators. I'm just giving an example here. It just does not mean that you should go for this. So the idea is that whenever now this is in a short buildup at 9:30, and you're looking at the exact same 34.7 over here, that 9:30 here, this, if your price also is signaling a short on this, then you can go with that. So here, obviously, this is below, super trend is signaling a short here. So you could probably just short over here with SL above this. This is just one idea. You could have your own indicators here. You can probably have maybe VWAP or whatever. You can have moving averages. You can whatever. You can combine 2 or 3 indicators. You can have RSI, whatever based on that. What I'm suggesting is this will give you some idea that a lot of writing is going on over here. So then if you want to short, then you can probably go and short if your price-based indicators are also doing the same. And this will be a lot more. Yesterday again was a big, as I said, big gap down and then sideways. So you will get all conflicting signals. On trending days, you would see that this will work wonderfully. You will not get conflicting signals at all. I mean, once you get short signal over here and you get a short over here, then you can get a tradable signal based on this, and then you can exit in profit. And especially on Wednesdays and Thursdays, the short signals are really good in this. You can capture long moves, big moves over here. On the long side, on other days, it will be tricky. Let me open put chart also for the same.
Hello.
Yeah.
Yes, Shrikant. Being option buyer, at the 16,700 is an ATM. So what should be, how should be a sign that we should go for a PE or C on the base of this indicators or a tool on iCharts tool? How can we identify the trend? Because what generally happens that after we identify the trend, market had already moved on that direction, and if we take afterwards we take the trade, then it is against our profit. It will make us a loss. So can you please guide on this then?
Yeah, this is exactly what I'm telling you about. You can use these signals along with price signals. So you can, when you say, now suppose, yeah, let us take this example itself. You are let me select a slightly better day, because this 1 minute. I think
Any one example you can give, then it would be helpful for us.
this is exactly the example that I'm talking about. If you see on, let me take this particular day here on 5th, or maybe a day before that, because this day what is happening, the whole scenario, it is sideways, and all you're going to get is conflicting signals here. So on this day, it is going to be tough. There is absolutely no way. Whatever indicator you use, I mean, only the shorts are going to work on this day. Maybe a short straddle or a strangle is going to work on such days. If you take a day like this on 5th, so if you let us go for for that. Probably that would be a better. I'll go. Let me take the expiry day here, 5th, and let us start at 9:30, which is around 35.5. 35.5. Okay. On this day, initially it was a short signal at 9:30. So we will just take that and we'll go through 35.5 on 5th May. Quickly.
Sir, the date is different on Option OI Breakup.
Let me, okay. Let me check. Oh, yeah. Okay, yeah, this is the one. Yeah, 5th. I'll open this and let me quickly do this trend. Let me save this. Put 35.5. So initially, I'm taking the 15-minute closed at 35.5, close to 35.5, or was it rather, okay, it was 35.7 actually. Sorry, it was 35.7. So I'll have to go for 35.7. Now, initially you have a long buildup at 9:30. At 9:30 on this same strike, I'm going to take the same strike. The strike I'm taking is the 15-minute close, because I'm suggesting you go for 15-minute time frame in the options intraday OI breakup. So you get a stable, proper signal based on the buildup until for the first 15 minutes. So I have taken 35.7, and here also I have taken 35.7 strikes. And here the first 15-minute signal was long buildup on this side, short buildup on the other side. So here, based on this, it is already in a long signal. So you could buy over here with a SL below the super trend, or you could go for whatever trend-based signals indicators you use. You can go with that, and then you probably exit over here. Now, until once you get into this trade, I am suggesting that you just stick to your price-based exits, because next you get a short buildup here at 9:45. It is indicating short buildup. 9:45 is over here. It is indicating short buildup. It doesn't mean that you exit the trade here. Once you enter it here, exit on the based on price. But for entry, try and be on the side of open interest. Whatever open interest is indicating, be on that side is what I am suggesting. And here now on the put side, it was indicating short buildup. So if you see in the morning, 9:30 over here, 9:30 over here, you could go short with a SL over here and trail it over here. So it has continued to indicate short buildup until over here. So you can keep track of these signals. Once you're out of the trade over here, then you again start tracking this and see what is happening here. Here at the next, you see maybe you've got out over here at 11:20 over here, and this is 11:30 over here. So you would only start taking a look into this again over here itself. Until over here, you won't be looking at this. Whatever signals are there, you're fine with those. And once you're out of this trade, again start looking at this at 11:20. Basically, the last signal around 11:20 here was the short buildup over long buildup here. So short buildup, you can go short over here because it is indicating short. I don't count this short covering and long unwinding. I ignore those because these are just very weak signals. For me, these are strong signals are what I focus on. So at 11:20 on the call side, the last strong signal was at 10:45, short buildup. So here it is a short. You can continue the short from here. And 12:35, again, you start monitoring. It is long buildup over here. So you can, this is the way you can, even if you go long over here, you are out over here and then you come, you will get a short signal over here and then you can go with the short from here to here. On Wednesdays, Thursdays, this kind of signals get easier. You will see, you will even catch some very big explosives moves on the buying side. If you see, this was on the put side, this was on 13:10 and on it around 1:10 onwards, long buildup from 1 o'clock. It had indicated long buildup. So if you are out of the trade over here, 11:10 you will jump into the long trade over here if you're continuously monitoring it. Here itself you will be long, entered long. After that there is no strong signal at all. In any case, you would trail here or probably you will just get out of the trade somewhere here maybe. So the idea is to focus on OI based sentiment over here on a higher time frame than on a lower time frame like 2 minutes, 3 minutes, based on whatever you select. You can enter the trades and exit the trades also. You can manage the whole trades based on price. I mean, some might think that basically you are just trading super trend, you are not using anything and all that. Yeah, very true. Basically, finally, your trades are going to be on price only. This is all only sentiment. What this does is it keeps you on the side of OI. And that is a good thing because what you will do over time is that you will be on the proper side. I mean, the sentiment will be on your side, most of the sentiment rather. I mean, it can change in between, but as long as you're going with the price, you're fine. And most of the time it will put you into the right trades if you continuously monitor this. So there's no hard and fast rule here. Select your own time frame. Don't go too high here. Does not make sense. Your option OI analysis has to be on the higher time frame for the analysis to be stable. But your price, you have to, because this is where you are actually paying whatever, and your stops and all that entries have to be here. Your risk is over here. So you make sure you're on a slightly lower time frame. You're talking about intraday only, so don't go high. Maybe 2 minutes, 3 minutes is fine. 5 minutes also will be late many times. So stick to 2 to 3 minutes is what I'm suggesting. And you can use your own indicators. You can add VWAP, etc. for whatever, based on your comfort level. So any questions?
Srikanth,
Yeah.
One more thing. IO statistic, can you just explain me some more details? I have learned from my mentor, but I was not able to get it more clear after in the charts.
Which exactly? OI
IO
stats.
status, OI states.
OI stats, this one.
Yeah. No, up in the menu,
In this
options
one.
menu. Options menu. Yeah, this one. Or the
Yeah.
open interest. OI change. So
Okay.
if in OI change, my mentor has explained me if I'm looking for the stocks like Astral, so I would be getting in levels where the puts and the call writers are there, and till that there is more probability the stock will go at that levels. So I can get an approx more benefit on that. Yeah, this.
Yeah, it is a, yeah, generally that is what is the accepted fact. I mean, basically now if you're looking at this, these are your supports and risks. Of course, the price is currently over here.
Yeah.
I mean, this may or may not tell you the whole picture. I mean, whether you're looking at this or whether you are looking at option chain, it is the same. Let me take some other script. It may be more clearer. Just a minute. Let me turn this off. Now see, if you see here, OI, this is the max OI here, and this is the max OI here. So the idea is that between 350 and 400 is supposed to be the range over here. So this is going to be the support, and this is going to be the resistance. That is the whole idea here. I mean, but I have not looked at this in too much detail, but this is generally accepted as the support and resistance because there's a lot of OI has got built here, and then this will generally be supported because this is supposedly institutions are there in this. They have built this max OI, so they'll support it. But you will see that once price breaks through this, it will quickly change and it will go higher. So you have to be careful with that kind of analysis. You can do that kind of analysis. But if you see now, I mean, this is supposed to be support and this is supposed to be the resistance, but price is below this anyway. So support resistances may not hold. I mean, if you are just looking based on highest open interest. So you have to be careful in terms of that. It could be highly liquid stocks, maybe that could be true. I mean, maybe if you're looking at, say, highly liquid stocks like these, even this is not making sense here. Now here is supposedly this is the max. Why? This is the max over here. And so this will be your 1300 and 1390, sorry, 1400. 1300 and 1400 are your supports and resistances. But then if price goes even comes to 1300, you will see that this will go away. So you have to be careful. I mean, this is fine as a concept, but it may not hold. That is what I'm saying. You have to be careful with this.
Thank you.
Okay.
Mr. Srikanth.
Yeah.
Just I have one request about the OA change. Can you make it in the bar graph, like bar graph representation based on time based, not the cumulative based, time based?
Time
like 9:15 OA call side change and put side change.
No, I didn't understand.
See, if you say same this one, it is the cumulative OA showing, right? If you start it from beginning 9:10, how many calls are added, how many puts are added, how many calls are decreased. I made same graph in our group also. I posted one graph.
Okay.
I posted one screen. Yeah.
I'll take a look. Yeah, I think I've noted it. I have noted it and I kept it.
See, we have why I'm asking. I subscribed one more website. I don't want to mention any other website name. What I am doing is it's working very good because we have OA change trend, we have call trend and put trend, right?
Okay. Yeah.
A call overall complete call trend. So I am keeping the complete calls and puts to OA change trend, and also ATM strikes OA change and trend on both separate from our website, iChart website.
Okay.
And other website, what I am doing, that time based addition and subtraction OAs.
Okay.
In the bar graph, I am keeping all three. It's working somewhat better.
Fine. Okay. I'll take a look. I'll take a look and I'll see. If you can just send me the details again directly to my Telegram.
Okay, sure.
That will be great.
Sure. I will send you I will send you that one. Yeah.
Okay. Sure.
Srikanth ji, Yogesh.
Yeah. Tell me.
Srikanth, I had a query. Can I go ahead, this Yogesh?
Yes. Go on, please.
Actually, I am just, the previous gentleman was asking one question on the similar lines. What I am actually watching is this SMC का जो PCR आ रहा है ना, put call ratio, which they are giving us every 5 minutes or 15 minutes. You can select that.
Yeah.
So on the similar lines, and generally वो पूरा नहीं लेते हैं, because see the difference usually may happen only on the top 6 strikes above the ATM or below the ATM. Okay. So they are flashing the OI change every 5 minutes, 15 minutes. So can I get that similar on the your software also?
It is not there, obviously. I'll have to see what
I
exactly.
think somebody in the group I had seen, they had posted that PCR picture.
They've been posting it since a while. No, I don't know what concept that is. I mean, if I can get details, we can build something like that. But see, I don't want to straight away just copy without understanding. I don't want to do anything, because unless I understand, I can't explain it to my developers and then get it done. I need to first, I don't even know what that concept is. So if I know, then I can probably do it. We have, that is, as I understand, whatever little I've understood, it is basically a very precise kind of trading method they are giving, and the data supports that method of trading. So I think that is what they're giving. So I mean, we have avoided that kind of stuff. So basically, to actually give it, I mean, tilt our what you call the give buy sell signals basically. So we don't do that. So and they can do it because I think they are linked to a brokerage or something. So
yeah, but what happens, what they are providing it to us is only the put call ratio changes. Okay, and then they are providing us in the tabular form.
Okay.
And the concept is that if the PCR is above 1, it is a bullishness, and if it is less than 1, it is a negative data.
Okay, I need to.
It's a general data taken from NSE. It's nothing. This thing. Only thing is, if you can provide the same thing to us on a graphical way, like in the charts.
Yeah, I mean, if I know, if I get the exact details, we can definitely do it. But we'll have to see. I mean, I don't have the details, so I'm not sure what to do. So,
thanks.
Sure. Okay. So, any questions about intraday OI breakup and taking signals using that? If not, I'll go to some other tool. People had asked. Yeah.
So you mentioned about the options monitor. For example, you were explaining 16,700 options monitor on 5th, which is the expiry day. So if we look at the chart for that 16,700 call and the put, so if the price goes below the VWAP and if the OI is building up, so can we take it as a confirmation to maybe short the call because at around 1:15 or 1:18 PM that day, immediately the price went down below the VWAP and the OI build up started very in a very exponential pace after 2 PM. So can we consider that as a confirmation for,
you're talking about this, the 16,700?
Yeah.
Yeah, I mean, this why increasing here, especially this, and this, let me see if I can zoom it.
So basically, this will hold good on expiry days. Am I right? Because only on expiry day, these options goes worthless. So can we take it as a confirmation? That is my question, so that we can maybe short it.
Yeah, absolutely. This is one of the key signals, right? Once price is below VWAP and OI is shooting up, it is basically a signal. It is basically a signal to short. Yeah, this is a signal actually to short over here. You can definitely take it as a signal.
Okay, thank you. So
hi Shrikant, this is Santosh over here.
Yeah.
Can you just open a straddle chart for me, please? I just have a question about it.
Yeah, before that, the previous person who was asking, was there one more question about this? Price?
No, actually, my question was like, in the past couple of weeks, actually, the intraday straddles or the weekly straddles have, failed miserably. So, is there any strategy or is there anything, maybe because OI chart, I mean, through the OI data or anything, is there any strategy which has worked? Because I was more interested to know in high IV environments like this, is there any strategy which has actually worked for, an option seller or an option buyer? the past one.
Yeah, let me tell you about there's one say study I'm going to discuss on straddle charts. So let us see that once we go there. Okay. So yes, straddle charts. Who there was one question.
This is Santosh.
Yeah.
For straddle charts, like we select the call and put separately, right?
Yeah.
Or it automatically selects the at the money call and put prices. If we want to convert into a triangle chart, then we have to select we have to click the drop down menu and select how far we have to go, like 500 points up, 500 points down. So can we add an option over here itself that what difference triangle do you want to plot? Like if it is the software is calculating automatically the at the money strike price, and then 500 points above, 500 points below, if I want to plot a triangle. So is it possible that we create a drop down menu, like if you want to create a triangle of 300 points, triangle of 500 points, triangle of 1000 points?
Can be done. It can be done.
That would be really helpful, because see, daily when we get the signal, right, there will be a gap up or the gap down. So we can, we come to know by 9-8 that Nifty is going to gap up by 500 points. And so that we can plot a triangle from that point onwards, like 500 points up and 500 points down.
Let me see, because see things will get complicated over here, and space also we need to see how we can plan it over here. But
or one we can do is in the drop down itself, the call strike. If we drop down, just like I've seen in stock mock, there will be like in bracket it's written like it's 500 points above the ATM.
Fine. Let me think about this. Yeah, I think we can do something.
And one more thing, if near this OHLC, the return is on the chart, if we can get the call price at the current and the put price separately.
You want it to be latest? You want to be displayed somewhere here?
No. In the chart itself, near the OHLC, the date is displayed and then OHLC written, right? Below that, if we can get like it's straddle, like 16,000 straddle, 16,000 call is pricing.
Not possible. Not possible. This is very limited. Even when we move to TradingView charts, there is no way to display that, because there is no way to display that, because this.
We'll just need the price. What's the price going on at present of the call and put?
That is possible only in Straddle Watch. In this, it is possible. In this, it is possible. See, these are call and put lines, so you can quickly take a look at this here. And this is the straddle line. It's something like here it is possible, but it may not be possible in the TradingView chart. This chart anyway is going to go away now, so it will be TradingView charts. And in this, basically, we just pass the straddle data, so there is no way to display call and put separately. So we can't.
See if it can be done. It will be really helpful for traders. Actually, I use it for spread trading. I'll actually require for spread also.
It will not be possible. Basically. Definitely, because I'll just tell you right now, it is not possible. It is not possible in this charts. There is absolutely no way to do it in this chart at all. I mean, there is a roundabout way, but I'll have to see, because any charting tool, that either this is a very old one, and whether TradingView, there is very limited functionality they provide us, and then we just have to, we have a little flexibility in customizing it. So we'll have to see what kind of customization we do, and it takes time for the developers to get familiar with this, because this is a very vast tool, and not good support is available. TradingView people are not even responding and all that, so that kind of issues are there. We'll try and see. We'll see. We'll dig further and see what we can do in this, and then we'll see if we can add call and put lines or show prices somewhere. We'll see.
No problem. Thanks, Srikanth.
Okay. About straddle charts. Who had questions about? If somebody can give me an example, we'll see based on the strategy that I generally recommend. Like the adjustments that we do, or I have discussed in my previous webinars, we'll see if something has failed recently. You can tell me, and then I can step through and see if that would have worked. Especially, you can avoid straddles Iron fly would be, iron condor would be better, because it is a defined risk trade, so that would be better. Straddles could be avoided. But I have one thing I can probably tell you for straddles. Let me take a day when it has really moved a lot. So what day is better? 4th is good. 4th, did it move a lot? Up and down, yeah, okay.
4th April was no, like
4th May.
1500 points.
4th May, right?
4th April. 4th April.
4th April.
Yeah.
Let me. Okay, this day. 4th April. Okay, from here. Okay, this. Okay, we can take that. Minutes. Let me go for 5 minutes.
A day before that was also, one-way rally actually. I think it was on 1st April.
Yeah. Let us take this day first. Then again,
Okay.
the reverse also was there. So because one day
Right.
then you adjust and then it is fine. So this will
Okay.
be a lot more problematic actually.
Okay.
First 5 minute closed at 37,767. So I'll say 37.8 is what we'll go with. 37.8. This date is not required here. It doesn't matter. So 4th April, 4th April. Wow. Okay, by the time there's one thing that you can look at, one idea that you can, if you are trading, and I don't know if you're going to trade this kind of a trade non-directionally, that would obviously be a big issue. And say if you have initiated it here, and by the time it hits over here, you are in like what, almost 200, no, about 150 points loss. I don't know after that what adjustment you can make. But one idea is here, once it hits the, if you're using Keltner channels, I mean, this is obviously a very bad day for this. Absolutely nothing much can done. If you are, by the time you adjust over here based on this particular idea that I was talking about, it will be too late. You need to adjust on this spike itself over here. But the idea is, if at this point above this channel, you above this, you can go whichever side it is going. What I generally, I mean, this is a very bad day to explain this, but basically the idea is on a normal day, this is abnormal day, but on a normal day at this point, you take a look at the which side this is. Obviously it is shooting to the upside. So upside call price, you put an additional 10% on this. If it is an expiry day, then probably another 15 or 20% on that. And then you go long additionally on that, or you maybe 1 or 2 strikes above that strike, you can go long the call. And put, you can leave it. Put, you can leave it as is, but go long the call, 2 strikes, 1 or 2 strikes above your short strikes. That what it'll do is, if the trend continues, then it will work out fine, or you exit as soon as the straddle price, you keep monitoring the straddle price. As soon as the straddle price goes back below this line, you exit that hedge that you have taken on the call side. And then you are again in a straddle, you can continue holding the straddle. What this does is it quickly hedges your upside. Maybe, I don't know how it would have worked out. Basically, you would have hedged somewhere over here, or maybe, I don't know, you have hedged somewhere. At this point, you don't hedge, maybe because this was such a abnormal move, you could have even hedged over here itself, or maybe over below before this happened. But even otherwise, on a normal day, I generally above this, at this point, I note the call price. If the price is going up, if price is going down also, the straddle price will shoot up. So based on whether the price is going up or down, call or put, I note the price, and basically above that, when it shoots again above that, about 10%, 15%, I buy a hedge for the call side. I don't know where, maybe you would have bought somewhere over here, or maybe, I don't know, somewhere over here. And then once it drops down below the straddle, if it now it keeps going up, then you can just leave it, and then your put price will probably cover whatever loss was there in this, and then you would be able to get out either at break even, or maybe on normal days you would get out in profit itself. Or over here you close off the hedge that you had bought, and then you are back into the short straddle. Then you remain in the straddle here. You again do the same thing over here.
Yeah, Srikanth, for that reason only I had asked if we can get call and put prices on the chart somewhere in the chart.
Yeah, that's right.
So that we can understand which leg is losing.
Yeah, for this, exactly for this, the person who trades this strategy, for him, I have created straddle watch based on his request. Actually, we could not add it to this. We could not add it to this, and that is the reason he uses this actually for that. This is what he uses, because here you get call price, put price, and straddle price over here itself. And then he actually also wanted IV to see if there is IV spike and all that. So based on that, he uses that for that.
Okay.
Now again, the another idea here, by the time you had initiated, we were talking about 37.7 or 37.8 over here, whatever, 37.8 here. By the time your straddle is here around 1 o'clock over here, rather 1 o'clock here, if the price has deviated significantly, you can adjust here. I mean, or you can, if you are in the same straddle, again, you are back to the same scenario. At this point, once it is going out of the band over here, you do the same thing again, and then you are ready, be ready to again hedge the call strike. So you are again favorably hedging your call strike back over here as the price goes until the market closes here. You have hedged your call and you are riding the put. Again, it did not go down over here. You can probably ride the all the way over here. So the idea is to, once it closes below this band over here, you would have closed. But here, in this case, you would actually, your put will give back. The hedge will make sure that you don't lose more on call side, and then you get back a lot of the premium from your open short put. This, of course, this was a very bad day to do something like that. It would be crazy because you would be in serious loss over here itself. You should be ready to actually do the, I mean, you should know that something really bad is going to happen to a non-directional trade if you're entering after such a big gap. So you have to be ready to hedge quickly over here. If you're going to wait for something like this, then it's going to be too late. But on normal days, you can just do, if this is not a big gap, then you can just coolly monitor this and do it very easily. And even after this particular, once the price has settled down and it was comfortable, would have been extremely comfortable trade where your put would have really given significantly and the call would not have lost because you would be hedged on the call side. People even just exit the call on this side, but then I would not suggest, I'm not too comfortable with that, because then a sudden reversal will put you in a significant loss scenario, and then the rest of the day you would be adjusting to just recover that. In this case, it would not be that bad because your call is only hedged. So your put will, if it reverses from here, you would still not be in a too bad situation. And if straddle continues this way over here, then you would be actually, your short put will significantly give you more than the call side. Call side would not lose much because you're hedged. So try this out. This works. I mean, something like this on such days, it will be wonderful. You hedge, probably you hedge somewhere here, and then you exit the hedge here, then you hedge again here. Your put will here will give excellently. You'll probably just exit it again over here, or maybe you can even decide on exiting based on what. Or if you exit the put over here, your straddle you will be able to get significantly good, because you are back into straddle over here, and then you will be able to capture this move very well. This allows you to basically stay in the straddle for the whole day. So take a look at this. It's quite useful. And this is a strategy which a person I know does it profitably all the time. I don't know, I mean, this has given me a very good idea. I need to check with him because he maintains very good records. He's a very good trader. So I'll check with him on this day, very interesting day. So I'll see what has happened on this day.
Yes, Shrikant, one more question. In the beta menu, you have given straddle, multi-straddle watch, right?
Yeah.
Multi-straddles, okay.
Yeah.
In this, when the market starts at 9:15, we start getting the signals like in the whole window, like 250 by 300 pixels width. We start getting like signals like VWAP, is it crossing down or not? But like you have given two options, like it's in the option menu also, you have given cumulative OI, and in beta also you have given a cumulative OI, right?
For this, actually, see, the multi-strike OI, cumulative OI, total PEC OI, price versus OI, actually, there's only a very little change here. We have given this only for the reason that I'll tell you why. For example, here, what happens is in the morning when this starts, you will not see this full time scale. So people,
that is what I'm asking. If we can get the complete time frame, like from 9:15 to 3:30 in multi-straddle charts also, so that would be
okay, multi-strike. Okay, I didn't.
Yeah. In those small windows also, we can come to know which strikes are properly leaning towards the down or towards up.
Fine. I'll note this down. Let me let me note this down. I can, it can be done. It surely can be
done. No?
Yeah.
Thank you.
I've noted it. I'll talk to my developers. I'll do that.
No problem. Okay.
Okay. Any question about straddle charts? Okay. Now variation of this for option buyers. Now option buyers. See, for option sellers, it's fine. I mean, you can do the whole thing. You can short the straddle, and then you can hedge based on once this is shooting up, and then unhedge when it is again down. But for option buyers, what they can do, you just keep monitoring the straddle. And that you only take at this point when the straddle is breaking out. When the straddle is breaking out, so if it is breaking out to the upside for the call, put a buy condition, put a buy limit order. Once it hits about 10%, 15%, whatever, on expiry days or Wednesdays, make it 20%. That will be better because the premium is low. But on Fridays, Mondays, Tuesdays, you can have 10% also is enough. So if it is shooting up, then whatever call, the price is of the call, put a 10% above that and then buy, and then you can close based on whatever. Just because what you can buy explosive moves and then capture this kind of move when the call is really shooting up. So just monitor the straddle. Don't trade the straddle. Just monitor it and capture whichever side it is going. Now, once this shoots up, if call is going up, at this point, don't go and buy the call, because what can happen is you'll see many times it is going up and then coming down, going up, coming down. You will see that it goes up and then come. Many days you will see that. See this not this here, but you will see many times you will find that the call will not trade much above. So to avoid whipsaws, you can have a 10% at this point, have a 10% buy limit order above the call price. And if it, and you once you buy, then trail it using whatever super trend, your VWAP, whatever you want, moving averages, however you want to do it. Capture whatever profits you can and just get out. Then again keep and then once you're finished through the trade, then don't keep monitoring the same straddle. Whatever is your current price, just keep adjusting it. Try and monitor at the money straddle all the time. So by this time, when this move starts, you are ready with your 38,300 straddle or so, and you're monitoring it over here. So, and be in that, basically, let me check on this day, basically you'll be monitoring maybe 38,300 by afternoon, 38,300. And this was on when 4th. You'll probably be monitoring this. So this will be much better for short traders, short straddle traders. You should definitely do this, because then you'll be able to stay in the short trade for a long time. So once you're out of this, probably just get out of this trade once you have hedged it, and then start monitoring at the money. But for long, also the way I'm telling you, over here, then you again, once this breaks out, again start monitoring. If it is going to the upside, again put a buy limit on the call side, and then if it hits, then take the trade, or else leave it. That's the idea. So such trades, buyers only monitor for these conditions. You would mostly get this trade at least once a day without fail. On each and every day, you would see that price will break out above the Keltner channel, and then you would be able to capture those moves. You would be able to capture excellent moves. The only thing is that make sure that don't get into moves like this. You have to get once you see this happening, have a buy limit order on the call side or whichever side the price is going, and only then go, because then this will avoid such scenarios. Because from here again, price went down, your call would have been in loss, and then again you would have to get into this trade. Here, if you have a buy limit order above, there is a call or put, you would be able to capture the move better. Any questions?
So that means that when the straddle line is going above the Keltner upper limit, then we should ideally buy a call.
No, 1 minute. See, your straddle will go above the channel when the straddle price is exploding. Now it can be due to a call or due to a put. Once this happens, you will have to see which price is going up, whether it is call or put. Whether this straddle going out of the Keltner channel can happen due to a call exploding or a put exploding. In both the cases, straddle price will go up. You got it?
Yeah. So we need to buy that, or
yeah. Let me give you a specific example. Let me take a look at the.
What I understood is if the straddle line is going above the upper band, we have to buy the call or the put.
No. Yeah, buy the call or put. Yeah, that's right. But there is one small condition that I said, but don't straight away go and buy. Don't straight away go and buy. What I'm saying is, now let us take a look at 6, that is yesterday, Friday, 34.7, straddle at 10.4. Okay, and I'll go to straddle watch and Bank Nifty yesterday 34.7 at 10.5. Let me see what is happening. 10.5, if you see, put price is exploding. This is put price is exploding at 10.5. So put price is about 603. So what you do is you have some kind of a stop loss, a stop buy order above that. Now 603, now based on whatever 10%, whatever it is, 60 points above that, 660 or so. I don't know whether this is going to hit. This is probably not going to hit over here. This is not probably going to hit here. If you have it at 15 or 20% or even 10%, because it will be 60.3 is 10%. So above this is 663, 664, which may hit or may not hit. I don't know. So even if this is not hit, you would continue to monitor and probably you would get this particular, maybe this particular trade over here. Somewhere during the day, you will get it. This is what you'll have to do. At this point, you need to, hello?
Yeah, we need to check whether it is either put price or the call price. Which
is, and on that, have a buy limit order for about above that. So you just need more confirmation that the price is going to keep going that side. Even if you get into this trade, you should be out of the trade over here. Or rather even over here, actually. It has gone below this here, either here or here. If you had even gone, maybe you would have bought over here. Say maybe your straddle price over here, maybe you would have bought over here at 10.15 or at 10.15, whatever the price was, you would have maybe bought over here at 6.51. 6.51, this straddle falls below about at 10.57. 10.57, you should be out over here. By this time, you should be out of the trade. So whatever your loss is there, you just take it and exit. Because you can't stay in the trade for too long, because as an option buyer, you don't have the luxury of that.
Srikanth sir?
Yeah.
You are using this 1 minute chart, 1 minute time frame for this straddle chart. Suppose if you are using 5 minutes, so I believe number of spike can be reduced, sir.
Yeah, you would also get fewer signals. Yeah, that is there. You can based on your preference, you can.
Okay.
There are moves that I have caught on 1 minute, which may not have been caught on 5 minutes, basically. Because what happens is you get a tradable move, even if in 5 minutes you may not even get it, but on 1 minute you can catch it and get out of the move also. So it depends. I mean, it depends.
Okay.
And when the price goes, when the straddle line goes below the channel, it doesn't mean that we should go and it basically means we should sell the call and the put. Am I right? It should be like more confirmation, because then the straddle will work.
Yeah, then the short straddle will work once it is below the channel. So your buy is then the logic for buy is gone, and you should be out of the trade if you're only buying using this. See, for buyers, as I said, you use say straddle only as an indicator to buy and sell. So for shorts, it is fine. I mean, this you can actually enter the straddle basically in a short straddle. But for buyers, if you are buying the call side based on this indication, then you should be out of the buy either over here or here. Once the straddle is gone down below the channel, you can again get into another buy trade over here on the call side or on whichever side the price is going. Yeah, I think it's again on the downside itself. So put again, maybe you will be able to trade this put move again over here. But you should be, if you are buying here, then you should be out of that trade over here. If you are, and the earlier system that was there, you would be shorting the straddle in the morning itself. Then you would hedge the call put side over here, and that you would be out of the put over here or here. Then you would again hedge the put here, maybe based on how the put moves. You are basically hedging against these moves, put moves. If you are shorting and then using these indications for hedging. Because what this does is for shorting, I like this. If you're doing this the hedging, I like something like this, because see, you would hedge, maybe here hedge may come or not, may not come. Even if you get a hedge here and here, you would be able to ride this whole move. This big move, this is huge. From here, 953 to maybe you would exit here, 828. a nice 40 point, 50 point move, you would be able to ride it. And even this, yeah, here maybe from morning you would be losing most of the move. Nothing is happening. But you can capture these moves with consistency. And here the idea of hedging is to get away with break even. You try and get away with break even profit loss and loss.
Srikanth sir.
Yeah.
Can you tell me more about option chain and stock built up? Stock specifically built up and all.
One question before we move on.
Yeah.
If we are going to select, if we just select the drop down of Bank Nifty, everything that we have selected after that, it goes haywire. Like if we have selected strike price of 35,000, and then we recollect, I want to trade in different expiry. If we change the expiry, the call strike, put strike, everything changes. So is it possible that the strike prices remain same?
No, I didn't understand this. Can you repeat?
Just change the drop down of expiry.
Okay.
You can just change first of all call and put whatever you like. Just select a triangle.
Okay.
Any triangle will do. 2, 3 point, 100 points.
Oh, you mean once I change this, this is changing, right? Once I change this, you mean this will change, right? Is that what is your question? Hello.
Yeah. Yeah. Now can you hear me?
Yeah, I can hear.
Yeah. So see the strike prices have changed.
Yes. Yes. Yeah.
Yeah. Can it be static? Like it won't change. If we want to change the expiry, only expiry will change, not the strike and put strike.
It can be done, but this was done so it will be easier for you to, because we try and set the strikes to close to ATM.
Close to ATM. That I understand. But if we are trading spreads, if we are trading diagonal spreads,
okay,
if we are trading triangles, it actually it's a little bit clumsy. We have to click again and again, select again and again. So that creates a lot of hassle. Takes a lot of time. If it can be done, if it's feasible, if everybody wants in our group, then it can be.
No, I mean we will have to probably give some kind of a toggle somewhere, site-wide toggle somewhere in my account, like how we.
Okay.
So
In the preferences, individual preferences.
Yeah, individual preferences, like how we do it for color changes and all that. So we'll see.
Yeah.
We'll probably provide it there. So
this is just a suggestion. If everybody agrees.
Yeah.
Basically, finally, the users are going to use it.
Yeah.
So if they want it, the suggestion is from my side.
Yeah, sure. I will probably, we can do something like this as a site-wide toggle. So those who want, then they want it throughout the site anyway, so they can go and set it.
One more thing, once we shift to TradingView, are we getting all the indicator library that TradingView is using, or there will be selective indicators only? Like I would like to use awesome indicator and alligator. Like I've seen in futures that these two indicators are there, but what about the options? Will it be available in the options also?
Oh, this will be the same software will be there for options, exactly same.
Okay.
I mean,
but then for straddles and triangles, we won't be getting a candlestick chart, right?
Candlestick for straddles, triangles will not be there. That will come only when we finally move to real-time data.
So what happens is if that plotting is not available, candlestick is not available, some indicators works only on OHLC, right?
Yeah.
Some indicators, that's what I'm asking. Will the Williams alligator and fractals and awesome oscillator will be available? I think awesome will be available, but those indicators which are
OHLC is not going to be there. So only the ones that work on close will work. Obviously, the other indicators will not be meaningful for option strategies. Yeah.
Okay.
Sir, what should be the distance of hedge in that straddle thing? What should be the distance? Or we should just select what should be the distance of the hedge when we buy? How far we should buy the hedge?
Ideally, by straddle width is if you're basically what you can do is when you are initiating. So if you are initiating at the money, then whatever is the straddle width, here the straddle width is about 200, 340. So around 350 is the distance. 350 points here, 350 points here.
No, sir, not this one. The hedge we buy when we do in the straddle intraday, like the
okay,
strike which is
okay. Yeah, this system that I was talking about.
Yeah, this one. Yes, sir.
For Nifty, about 1 strike out, and for Bank Nifty, maybe 2 strikes out at the most.
Okay.
That would be the max. Don't go too far out, is what I suggest.
Okay. Thank you, sir.
Yeah. Okay.
Srikanth ji.
Yeah.
Just to know, I want to share my observation. Before, one gentleman was mentioning about 5 minutes he is going to check the straddle chart and the execution is 1 minute.
Yeah.
When you are checking the 5-minute straddle chart, just observe the RSI divergence. It's working very nice for buying purpose, especially Friday and Monday.
Okay.
RSI 9 divergence in the straddle chart. If we add in the downside, RSI indicator with the 9 parameters.
Okay, 5-minute chart.
A 5-minute chart or 3-minute chart based on the recombination. So when RSI divergence shows in the bullish divergence, straddle is in the straddle price in the downside of the Keltner channel. It's below the Keltner channel. Then you can go to the 1 minute time frame. There you can see the buying opportunity.
Okay, this is, yeah, you can note whoever, listening, you can take a look. And probably,
I think you understand my point, right?
Yeah, got it. Yes.
Okay.
Can you kindly repeat?
Yeah, can you repeat, please? RSI, or the logic?
No, see, RSI divergence.
Yeah.
It's a Keltner, the price is now Keltner below the Keltner channel, right?
Yeah.
Where they see that their price is below the Keltner channel. See the RSI 9 showing divergence.
RSI 9. Huh?
RSI 9, yeah. I'm following RSI 9. Just change the settings to 9.
Okay.
Divergence means bullish divergence. You see that when the price is at 14 something, yeah. Wherever it's below the Keltner channel,
okay.
there you can see the RSI divergence.
Yes, here.
Same time you can go to the 1 minute time frame. There you can execute the trade for buying, not for selling.
Fine. This is one idea you can take a look. I mean, even this is probably a divergence. Prices going down.
Wherever divergence you see this, then you can go to the jump to the 1 minute chart.
Sure. Okay. Any other questions you have, or let me.
Sir, this hedge system, would it work in RN5 also? Like we put the main hedges par like 500 and then we buy an extra hedge for the strike which is spiking up. Will it work in that?
I didn't get you. Can you repeat your question?
So like in RN5, we are buying hedge like 300 points away, right? But when we could buy the main hedges like 500 points away. And when one of the strikes is spiking up, and we could buy that extra head, like you said in the straddle.
Yeah, that could work. Yes,
it can work in this also.
Yes, it will. Yeah.
Okay. Thank you.
Yeah. Okay. Any other questions, or I can let me stop the recording from one.